With this, now I request our guest, Mr. Ashish Kumar Chauhan, MD and CEO of National Stock Exchange, to kindly address the gathering. Sir, over to you.
Respected Chairman SBI, Shri Dinesh Khara, whole-time member SEBI, Shri Ashwani Bhatia, the President of WARC, Shri Rathi, other friends on the dais, ladies and gentlemen, it's a pleasure and honor to be in front of you. The theme today is about Viksit Bharat and how does a society progress and become developed. Societies progress on many fronts, but there are trends, there are long-term trends, and there are bases on which the societies progress. The first and foremost base for a society is to create trust. Trust on its government, trust on its judiciary, trust on its police, trust on its regulators, trust on everyone else. If we cannot have trust in figuring out what is correct and what is not correct, what is the truth and what is untruth, then that society will always be confused. That society will not be able to figure out what is being reported to it is correct or not, what decisions to take. And that is why, for me, when I was invited, I was thinking that what to tell this community, which is the base of figuring out what is correct and what is not correct in our corporate sector. You give us and all my investors the accounts. It is not a mere process. You are following the process. It's not mere the techniques or technology. You are following the techniques. You are using those technologies. But what you are in essence manufacturing is trust. And trust is very difficult to create and very easy to give up. We have seen in all our lives, right? Trust is very difficult to create. The members of this institute and your forefathers and their forefathers have worked hard to create that trust in the institute, that all of us are getting that fruit of their creation of trust, but the onus is on this generation to also continue to maintain that trust of people, build on that, so that society trusts the community, society trusts the numbers you put out, from the smallest company to the largest company. Any change, any difference, any untruth, and truth is a very different issue, truth is again very ephemeral. It is said that the truth changes a little bit, it becomes a lie. झूठ की कोई इंतहा ही नहीं, means anything else is untruth. Little bit. You say, I have worn a blue shirt or a blue coat, and it's slightly navy blue, and it becomes untruth in some people's mind, right? And so, what society expects from you is basically truth and nothing but the truth. And if you do it correctly, day after day, year after year, then that is what will be used by the society to ensure that it trusts its people. And what you are bringing that trust is in India's entrepreneurs. When the president of WRC said that we are 4 trillion economy, we are going to become $40 trillion economy. Who will take that India from $4 trillion to $40 trillion? It is the entrepreneurs. And how does the entrepreneur create that wealth? It is on the basis of stock markets and the banks, because the funds that are provided to them by banks helps them create those businesses, expand them, and the stock market allows them to create that wealth, which is that what we know as market capitalization. So I'll tell you that there are two larger trends, but the first part is that what society expects from you is truth and nothing but the truth. And please, you have done this before, the fraternity has done for years and years, and fraternity should continue to do that. And whatever technology, tools, processes that are available to you, you must continue to use them. You continue to improve on them based on newer things, and continue to provide the best information to the society. When NSE was created, in 1994, we started our operations. Today, we are almost at 30 years of our formation. When NSE was created, it was a completely automated exchange. Before that, there used to be floor-based exchanges. NSE never had a floor. Total market capitalization of India was 4 lakh crore rupees. Not more than 1 million people used to transact or invest in India's share market. It was a game of the rich people. Society had no interest in that. Today, after 30 years, it has now 10 crore investors, 7.5 crore households. 20% of India's all households now invest directly into stock market. It is no longer India's rich people only playing. It is you and me. Small people are also investing their hard-earned money into the stock markets. The market capitalization has gone from 4 lakh crore to now 450 lakh crore, 112 times in 30 years. And why this has happened is because the trust that has been created by whatever NSE has done, whatever SEBI has done, whatever ministry has done, but whatever chartered accountants has also done. So as much of the credit that goes to any of the institutions, that credit also goes to India's chartered accountants, that you have shown and created the trust about the entrepreneurs. And those are the entrepreneurs who are going to take India forward. There are two large trends that are happening in the world. One is what I call technology. Other is what I call demographics. Technology is the only change that happens in the world, and the wealth gets created out of technology. The society surrounds it. Not many people knew, not many people could theorize that technology is the only one that creates wealth. Technology doesn't have to be information technology. It can be just a conceptual technology like accounting. Accounting is a technology. Decimal system is a technology. So it doesn't have to be, even creating fire is a technology. Rearing goats used to be technology 10,000 years back, right? So technology is any way to do newer things, and a society which adapts to newer technologies are the ones which are going to create wealth in the future. And the societies which do not adapt to newer technologies remain behind. India was a pioneer of all technologies 2,000 years back, even 1,000 years back. But somehow, we lost that in last 1,000 years. Now we are coming back. Many times I say that when the technology race was run in last 1,000 years, India was not even in the stadium, not even in 10 kilometers from the stadium. Today, we are at the forefront. So whenever the new wealth is going to be created, India is going to be at the forefront in next 30, 40, 50 years. The second part in technology game is the technology comes in waves, and waves come faster and faster. Earlier, technologies used to change slower, and so wealth used to be created slower. Industrial revolution, which created all the steam engines and cloth mills and everything, in 200 years, it created more wealth than that was created 10,000 years before that. But next, because the technology waves have become faster and faster, last 50 years have created more wealth than what was created 10,000 years before that. And next 30 to 40 years will create more wealth than what was created in last 10,000 years. So next 30, 40 years, the societies which adapt to newer technologies, the societies which have young people, because young people learn newer technologies, and they adapt to newer technologies and they create newer wealth. The societies which have more adaptation to technology and have younger people are going to create huge wealth. And in that context, if you see across the world, which society is technology oriented and young? If you start with Japan, it has become old. Their number of people is actually going down every year. If you see China, China's number of people are going down every year. By year 2100, China will have less than half of population of India. Today we are equal, but in next 75 years, China will have less than half number of people compared to India. Then you come to India, we are young, technology oriented. You see near us, there are larger economies like Pakistan, Bangladesh. They are actually pretty large in terms of number of people, but they are not technology oriented. They are backward looking. So we are young and forward looking. We are young and technology oriented economy. And then you go to Europe, Europe has become old. If you go to America, America is also reasonably old. So the only country, only nation, only society that will create newer wealth is going to be young, technology-oriented India. And India, with 17% of world population, 22% of world's young population for next 30, 40, 50 years, has a good chance to create a large chunk of the new wealth that is going to be created. And that will be reflected on India's stock markets, India's market capitalization. Today, on a good day, stock exchange, NSE, gets around 2,000 crore orders in 6 hours. It gives you response time in 100 microseconds. 1 second has 10 lakh microseconds. It's very similar. A difference between a 1 day and 3,500 years is the same difference between 1 microsecond and 1 second. So, this is way beyond anyone can imagine, but 2,000 crore orders, UPI does not get in a month. We get in 6 hours. And we do, on a good day, trade of 29 crore trades, that is 290 million trades, which is around 50% of all trades in the world in stock markets. There is no similar system. Google, you ask question, they will answer you whatever they feel like. Twitter will give you whatever they feel like, and response time has no relevance. In NSE, you place an order. I cannot tell you that you try to buy at 100 and I'll give you at 100.05. We have to be exact. There is no Amazon, there is no Google, there is no Facebook, there is nothing, no Twitter, even comparable to what we do at NSE. But of course, you guys don't have to know. Why I'm telling you this is, it is the technology which has made this possible to create that trust. And my humble request is to all of us, because all of us are reasons for this trust getting created. We are also beneficiaries of this trust. We are all drinking out of the same pond. So if any one of us, any institution, any individual is trying to muddy the water or put the poison in that trust, then we are actually poisoning everyone. So my request is, please be extremely careful, worry about the public trust, more about the clients you have, because if you don't have public trust, clients have no relevance. Right? So with that, I will close my speech, but thank you very much for calling me here and wish you all the best for the conference.
Thank you so much, sir. Now it's time to hear from our another guest, Mr. Ashwani Bhatia, whole-time member of SEBI. Sir, over to you. I request technical team to kindly put the presentation.
Yeah, okay. So a very good morning to all of you. Mr. Dinesh Khara, Chairman SBI. He was my chairman also when I was the MD at the bank. Mr. Ashish Chauhan, Mr. Rathi, Mr. Ajmera, Mr. Gautam Lat, past presidents of ICAI. I haven't spoken at such a huge gathering. The last big gathering like this was at the Indian Military Academy in Dehradun, where about 1,100 gentlemen cadets were there in uniform and in rapt attention, but very nice to see the tricolor scarves all of you are wearing. I love to start my talk with the word serendipity, and the serendipity this morning is this. This morning I was watching the Democratic Convention in the US, and Kamala Harris talked about the opportunity. And that opportunity was taken by her mother about 50 years back when she went to America as a young student. And the opportunity today in India is perhaps as big as it was in America about 50 years back. Mr. Chauhan and Ankit did talk about trust. So if you came to State Bank of India in the 90s or in early 2000s and you entered the lift lobby, you would read 5 words. And those 5 words were, honesty is the best protection. And these were the words of R.K. Talwar, our chairman, who became a chairman in 1969 and had to leave in 1976. And the government at that time had to amend the SBI Act. There was an amendment called the Talwar Act. And despite whatever was happening, all the challenges before that, he still was sent on leave. They could not do anything to him because of his character. And that is how great institutions are actually built. So this morning, as I speak to you, I am not speaking to chartered accountants, but I think I'm speaking to doctors and I'm speaking to partners. And very often it is said that NSE, BSE, organization that Mr. Chauhan heads, are first level regulators, but much before them is actually your role, So you are not only a first level regulator, but you come in much, much before that. I don't know. आप ही ले गए थे। Because what you people do, it has already happened much, much before. You are with our regulated entities much, much before we see the trouble. And the case for you to do a great job is obviously very, very compelling. But more than anything else, just look at the numbers of India. I'll just skip this slide. Look at these numbers. So the wealth of India is growing very, very fast. In 2013, our market capitalization was just 74 lakh crores. Today, as Mr. Chauhan also just said, we are at 440 lakh crores. This is increasing. The wealth in the capital markets actually doubles every 5 years, but over the last 3-4 years, this has accelerated even more. The AUM of mutual funds, something that we regulate very, very tightly, has actually gone up 8 times. And today, as I speak, this number has crossed 65 lakh crores, right? And don't be surprised, in our lifetime, the mutual fund industry could be bigger than the banking industry also, looking at the current compounding growth trends that we are actually seeing. The number of listed entities, of course, this has come down because in the late 90s, we asked a few of the regional stock exchanges to close, but still about 5,000 companies are listed on the exchanges. And the number of demat accounts, of course, we've crossed 15 lakh crores. But these are the numbers that we are talking about. In 2013, market cap was 74, we are at 440. The Nifty is currently above 24, Sensex is above 81, demat accounts 15.1. The turnover in the cash market is today 1.2 lakh crores, and the daily turnover in the F&O, something about which we are not particularly pleased. There is a discussion paper already outside. The average is close to 300 lakh crores, but on some days, the turnover, the notional turnover crosses about 700 lakh crores, which is about 2 times the GDP on a notional basis on a single day. That is how big the market is. And look at what has happened in the mutual fund industry. This is something that is done by the funds in a fiduciary capacity. AUM of 664 lakhs. The number of folios is more than the demat accounts. The SIPs have crossed 23,000 crores, and AUM to GDP ratio used to be just 6% in 2013, has crossed 18%, and AUM to bank deposits, we are just shy of 30%. This is how big it is, and this is the capital raising that is happening. In the month of July itself, 17,000 crores was raised. In the first 4 months, 2.1 lakh crores. This has already exceeded what was raised in financial year 2023-24, which was 1.97 lakh crores. And the debt market, we are raising close to 10 lakh crores a year. So if we have become so big, obviously the responsibility falls on you fairly and squarely. And how our legacy is built, how our great organizations built. Obviously, they are built on bedrock of good governance. We are, of course, also in the era of Zomato, Swiggy, instant noodles, but we also know that anything that is looking at quick solutions, shortcuts, instant success will not take you very, very far. So obviously the story is very, very compelling. Many of you would have also read some orders that come out of SEBI. You would be reading maybe only 20 pages, 30 pages, 40 pages of an order. But the kind of hard work that goes in doing an inquiry, an investigation, may take a year and a half. And I think all of that could have been prevented had the first level, that is, all the chartered accountants, our partners, the so-called doctors that I talked about, if you had done your work very, very well. So I would say that 440 is just a number. We are at about 1.4 times the GDP of the country, but the potential is more as more and more companies list in the country. The idea is that we get more and more companies to come and list, do their IPOs. The pipeline is extremely strong, but look at the trends that are happening. And I was in an interview board yesterday and I said, what is common between BAT, Whirlpool, and Fosun? And most of the people could not answer, but we actually thought that when we came out with the delisting provisions, people would come and delist, but the reverse is happening because the valuations are here. So, BAT exited ITC, Whirlpool came down to 51%, and we now have foreign companies wanting to list in India because the opportunity is much, much better over here. So I'm thankful to the WIRC for this invite. Auditors play a crucial role in ensuring the accuracy and integrity of a company's financial statements. By providing an objective and independent assessment, the auditors help maintain, and this is very important, the trust between the company and its stakeholders, including shareholders, creditors, and regulatory bodies. Their work helps detect wrongdoing, errors, and financial misstatements, ensuring that financial information is presented fairly in accordance with relevant accounting standards. This not only enhances the credibility of a company's financial reports, but also supports informed decision making. SEBI derives its powers from the SEBI Act, 1992. We know that SEBI is a creation of a crisis. The mandate of SEBI, as reflected in the preamble that was there in the first slide, is to regulate, develop, and to protect the interest of investors. Not only us in SEBI, we protect the interest of investors, but you also protect the interest of shareholders, of people who are not in the room, that is what you are actually looking after their interests. SEBI facilitates capital formation in the securities market, and we have been the most active securities market regulator in the world, and we try to keep pace with fast-changing market dynamics. I've already presented you with the data, but just to tell you once again, look at the market cap, 450 lakh crores. Another 50 lakh crores is a debt market. Another 5 lakh crores is REIT InvITs. So we are talking of staggering numbers, 505 lakh crores. This is an approximate number only, but this is actually going to go much, much bigger. SME enterprises and the platform, of course, equally important for the simple reason that it takes away risk from the banking system and it gives them an opportunity to come into the market and get equity. That has been moving very, very well. We've had 14,000 crores of capital raise. Last year alone is 6,000. But we are seeing some amount of challenge over there. We request you to be extra careful as far as SME IPOs and fundraising is concerned, for the simple reason that these small companies going forward will become much, much bigger. Broad principles on LODR, of course, You would all know SEBI LODR regulations contain principles and obligations for listed entities to ensure financial integrity and high quality audit. Information is required to be prepared and disclosed by the listed entity in accordance with applicable standards of accounting and financial disclosure. Listed entities are required to implement the prescribed accounting standards in letter and spirit in the preparation of financial statements. Auditors need also to be vigilant. There's an inherent conflict of interest in related party transactions. The directors have to manage the interest of the company and their duties on one hand, and the interest of themselves, their family, and friends on the other. Mismanagement of this conflict of interests leads to diversion and siphoning of funds, ultimately benefiting the promoter entities at the cost of erosion of shareholder wealth. Auditors need to be vigilant on this and ensure that disclosures on related party transactions by the listed entity are in compliance with the law and spirit of the regulations. Auditors should also scrutinize transactions with connected entities which have the potential to benefit related parties. On SME side, we are also concerned, एक IPO आता है, you get a preferential issue, you have a rights issue from SME platform, it moves to the main board, more preferential issues, but actually the money and all is not coming in. You need to actually read a few orders to understand what is going on. Thus, the role of auditors in SME companies is critical to protect the hard-earned money and savings of the public. Recent measures, of course, SEBI has taken quite a few. Ambit of related parties have been widened. All promoters and promoter group entities and shareholders having more than 10% or more in a listed entity become part of RPT. The scope of RPT has been enhanced. Transactions between listed entity or any other subsidiaries on one hand and other person or entity on the other hand, the purpose and effect which is to benefit a related party of the listed entity or any of its transactions. Prior approvals, a threshold of 1,000 crore or 10% of previous year's annual consolidated turnover is what we look at. There are plenty of examples, all of you would know, you may have discussed, but we simply do not like layering. We do not like money going to related parties. A couple of years later, you write it off. It is all very, very easy to monitor. We have seen transactions flowing on a single day to 10 different entities coming back to the same company in layers. It's not difficult to manage. Today, there's adequate cooperation. There are digital footprints. So please be careful and be good partners, good doctors to the entities that you engage with. Wishing you all the very best and hope you have very good deliberations in the next couple of days. And thank you once again for the opportunity given to me this morning.
Thank you, sir. We also recognize the presence of our Central Council member, Piyushji Chajed. Thank you, sir. Now it's time to hear from our esteemed guest. We all are waiting for Dinesh Khara from SBI, sir. Over to you. Let's have a big round of applause for him.
Good morning, everybody. And my special thanks to Mr. Ankit Rathi for giving me an opportunity to be here before all of you. Well, of course, the very critical function for any financial sector entity is that we all work in a very fiduciary capacity. and we work in a fiduciary capacity, trust becomes the foundation for really performing that kind of a role. And when it comes to trust, what was mentioned in terms of the volumes, in terms of the capital market, as high as about 400 trillion. When it comes to mutual fund, about 65 trillion. The banking system, the deposits are around 210 trillion. When it comes to the loan book of the banking system, it would be somewhere around 160, 170 trillion. So these are the kind of numbers which the economy is rattling out today. And also, in that context, the role and responsibility of the chartered accountants is actually magnifying. I'll just share with you, as far as we at State Bank of India are concerned, almost about 14,000 transactions are happening every second. So when it comes to validation of these transactions, establishing genuineness of these transactions, this is a role which is expected to be carried out by the chartered accountants. So naturally, how to handle such volumes. There were point of times when perhaps the physical verification was expected, the sampling was done, the samples were arrived at, and then those transactions were looked into. But today we have come to a stage where perhaps we can leverage artificial intelligence and we can leverage analytics to work out a pattern, and then that pattern can be subjected to an evaluation which would be even deeper and can help the chartered accountant community to really give a meaningful picture to the management of the bank. And also, at the same time, this also gives an opportunity for even corporates to understand what really is happening. And they should not become the victim of the steps being taken by some of the miscreants. So I think to that extent, the very basic function of the audit itself is evolving. And it is evolving to an extent which is going to be beyond anybody's imagination. And more so when we talk about our journey to become the Viksit Bharat, this enormity will further get multiplied. This enormity will further get compounded too. So I think because this happens to be the professional development body of the WIRC, and perhaps if I may say so, Bombay happens to be the commercial capital of the country too. So the knowledge which will emerge from the fountainhead from here will probably go a long way in terms of strengthening the practices of the Institute of Chartered Accountants across the country. We, banking and accounting, are quite symbiotic, and banking to a very large extent is dependent on the accountants for the conduct of the business. When it comes to taking credit decisions, we rely on the balance sheet, we rely on the cash flows, and we need to have a systematic way of recording those transactions, and that is further verified and validated by the body of the chartered accountants who are assigned this responsibility. So our basic decision making has got a premise, and that premise is the audited numbers of the corporate world. And that's why we always say that it's a symbiotic relationship. And it's not merely at the time of sanctioning loan, even much later when it comes to looking at the value of the stocks. We have the system of having ASMs, and we rely upon the ASM's reports. And it is expected that the job done by the ASM is very, very professional in nature. It actually helps us to have a deep insight into what's really happening on an ongoing basis in a particular corporate. Of course, when we are moving towards the Viksit Bharat, we are also observing that newer and newer structures are coming up, be it AIF, be it InvIT, be it REIT. And there is a relationship between a holdco and the step-down companies. So when we take the credit decisions, we look at the kind of comfort which we can draw upon the governance standards of these entities. And naturally, since we are having a fiduciary relationship of lending money to those who are ensuring the corporate governance, it becomes a very integral part for the institute also to come out with the standards which can be actually applied on ground and which can give the comfort to the lenders community, and also at the same time what was mentioned in terms of a huge capital markets situation today, about 400 trillion worth of capital market, about 65 trillion worth of mutual fund. It's a huge source of channelizing money. So unless and until the corporate governance aspect are appropriately commented upon by the chartered accountant, the job of the lenders and job of the investors becomes quite a challenge. And when we talk about moving towards the Viksit Bharat, I think unless and until we have the credibility of the reporting, we perhaps cannot move towards Viksit Bharat. So that is something which is a responsibility cast on this particular group of the professionals who can actually ensure that any potential accident in this particular space can be avoided in good time, which will go a long way in terms of ensuring that the confidence stays intact and the trust remains intact for all those investors which are small investors, which probably don't have the skill to read those balance sheets. They are essentially looking at the auditor's report and also drawing a comfort. And similarly, when it comes to SEBI also, when they're evaluating the IPO applications, so they also draw comfort upon the reports which are submitted by the group of chartered accountants who are giving an opinion about valuation, who are giving an opinion about the true and fair state of affair of the balance sheet. So once again, this is something which all of us rely quite a lot on the reports being given by each one of you. Having said that, I must also mention that considering the fact that there is a limited time available with each one of you, and perhaps if at all you get into details, it is for you to decide what all details you should get into so that you do a job which helps you in achieving the purpose, what is intended with the help of these reports. So naturally, there is a concept of materiality, which is very, very relevant, and that concept of materiality and also the accounting policies which are adopted by various boards, they probably need to be looked into in the contextual reference, because there could be something which could be material for a smaller entity, may not be material for the bigger entity, but there is a need to assess the impact of that on the overall earnings of the concerned entity. When we reflect on the developments of the accounting profession over the last 30 odd years, we find that there is a very clear movement towards accountability. Like many other professions, the accounting profession was on self-regulation model, and this approach had worked very well for a fairly long time. However, with many corporate scandals that surfaced in the year 2008 and afterwards, the legislative mechanism was further strengthened, and also in different countries, it's a different route which has been adopted, but over here in India, the route adopted was through Supreme Court and their judgment in a very old case, wherein they brought in the concept of NAFRA. And that NAFRA is something which is more like a adjudicating body in the event of any dispute. But at the same time, I would say that NAFRA is also evolving with the passage of time. When they started, it was at a very different level. Now with the passage of time, it came up in the year 2018, but now almost about 6 years have gone, and that is something which has given it more credibility, more teeth, and more relevance too. We have seen that NAFRA, despite the criticism which it faced, to my mind, it is something which has actually benefited the profession of the chartered accountants. In short time, it has established its relevance and also is looking into various accounting standards in the context of India, which perhaps is very much required. When we look at the opportunities, well, of course, what is being talked about in terms of Viksit Bharat, this particular profession is bound to see a multiple opportunities which will flow its way. The thought which is crossing my mind is essentially in the context of the GCC, the global capacity centers which are coming up in the country, and thanks to the courses which are being offered by Institute of Chartered Accountant, in many respects they are being accepted by many of the overseas countries. So to that extent, this opportunity is something which perhaps will help us in shoring up our services export and will contribute in terms of India becoming a developed nation. And of course, as I mentioned, that we need to adopt the OpenAI, ChatGPT, etc., etc. These are the newer developments which are happening in the ecosystem. As the body of professionals, we have to continuously look at it. How can we adopt these newer innovations for ensuring that we remain relevant and we contribute to the increasing volumes. Secondly, I believe ICAI too has the responsibility to play a greater role in formalization of the economy and encourage the practice of accurate bookkeeping. I have briefly touched upon when I refer to the markets and when I refer to the dependence of SEBI also on the reports given by the group of professionals like chartered accountants and the valuers. So to that extent, this is again a very niche segment, and perhaps after having acquired the basic qualification of the chartered accountancy, perhaps there is a need for creating a body which can support such niche professions which can be adopted by some of the professionals who have got special interest. We have seen that over the years, the businesses have been organized as proprietary and partnership, and traditionally, there has been hardly any focus in terms of creating capital. But as the country is embarking upon the newer initiative of becoming a developed market, developed India, perhaps the entrepreneurs also are required to be educated that there is a merit in going through the formal channel and also creating reports which meet the regulatory expectation and the regulatory bodies. We have seen that almost about 58,000 plus active 1% companies are there in the country, which actually speaks volume. And when it comes to limited liability partnership, the number is as high as about 341,000. So the need for bringing in the appreciation for compliance is actually multiplying, and there is a need to educate all such people who are involved into such entities to have a greater appreciation in terms of the regulatory environment. From the bank's point of view, as I mentioned, that it's more of a symbiotic relationship between bank and the chartered accountancy profession. Of late, the newer IBPC code which has been brought in, I'm happy to share that almost about 63% of the resolution professionals happens to be from the profession of the chartered accountants. So that itself is a reflection that how the basic qualification which is being offered by Institute of Chartered Accountant, how it is being put to greater use by various regulatory bodies, and because they are in a position to create value. That ICAI has earned, it must look at exporting. One, of course, is something which we can do that, this particular skill set, maybe through the GCC, and also supporting the legal system as well. And also, when it comes to the institute, they have to be very mindful in terms of the standards which are there for qualifying this particular exam. Because of late, we do see that there is a scope for further enhancing the barriers and eligibility for qualifying these exams. There was a point of time when the qualifying members used to be just about 2%, but I believe now it has inched towards about 7 to 10% also. So when we talk about the numbers, I think quality is something which we can perhaps never compromise because, as I mentioned, the responsibility cast on this profession is enormous and it touches everybody's life in the economy. So to that extent, we perceive it to be a very noble profession. We perceive it to be a foundation for trust. We perceive it to be a very, very important component for India to become the developed India. Thank you very much and all the very best for the deliberations. Thank you.